Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, April 22nd, 2022. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. These actions is what keeps this channel going. Thank you. So we have somewhat an ambitious agenda today. Stocks are under severe pressure. I'll show you some of the ways you can trade not only on daily charts but also intraday. So for those who love day trading, stay tuned. I'll show a bearish market divergence, market breadth divergence, so that's not a good sign again. Biotech and semiconductors, two of the most riskiest sectors out there, well, industry groups technically, are at 52-week lows. That should tell you something about the risk aversion right now. And I'll show you Netflix stock, and you gotta know when to fold them. You gotta know when to run away, basically. High yield bonds are at also 52-week lows, and this is generally bad for stocks due to correlations. I'll show you what I mean. Dollar again made a new 52-week high. I keep thinking that it's gonna top out, and it just keeps not topping out. And British pound collapsed to new lows, and so did Swiss franc. This is pressuring, precious metals basically. And Bitcoin currently at a critical level, and we'll see if we're gonna collapse from here. If you're a subscriber, then stay tuned. We're gonna cover all of these various stocks and securities. Lots of gold miners you can see here. So there will be a separate video. If you're not a subscriber, consider signing up by going to MasterChartsTrading.com. Okay, so looking at that S&P 500 this is futures ES1 exclamation point. The stock market, generally speaking, just closed, but there's after hours going on. So, but we can pretty much see the picture. Today, huge drop. Today is Friday. Very large bearish candlestick. So additionally, you can see on this chart we have the green, blue, red, and yellow horizontal lines. These are my indicators. You can find out more about them by going to the description link in the description. And what happened today is S&P 500 once again dropped into caution levels. So obviously that's not a good sign. Additionally, the outright bearish levels for S&P 500 is really close at its 41.59. So if we close below that level, I think it's game over as far as the bull market is concerned. So we'll, once it gets there, or if it gets there, we'll consider selling the bounces, so selling short the bounces. You can also buy puts, and once, or if we get there, we'll cross that bridge, so to speak. But generally speaking, this is not a good sign, obviously. So we will keep it go and see what happens next. Same goes. So how do we trade on intraday charts? So number one, make sure it's a continuous security. So don't use like a stock, ETF SPY. The reason being is you can see there are gaps here. So this is, for example, a gap between 5th of April and 6th of April. And then there's a gap from yesterday to today. So if we look on the intraday chart, let's say on a 5-minute chart, you will see those gaps, and they will mess up you see there's a gap here. So this will mess up the indicators, my indicators, the MasterCharts Trading price action indicators. So if you want to trade intraday, you need to use a continuous security. So continuous security for S&P 500 that you can use, and it's actually live. So you don't need to, it's tied exactly to the futures. So you do not need to have a special account. You can use this symbol on TradingView, SPX 500 USD. It's literally live. So I can show you this 1 second chart, for example, and it's happening as we speak. You know, there's a few minutes left in the session and people are still trading, so you can just see it moved. So, but looking, let's say, on 5-minute chart, and let's say you had an opportunity to trade this security, you can buy calls or puts on S&P 500 ETF. But once again, you need to use this security, SPX 500 USD, and then trade ETF SPY. Do not use ETF SPY like I just showed because of the gaps. So looking at this chart, you can see a tremendous move. So first of all, a breakdown right there. I want to zoom in. So this is how we day trade. This is a 5-minute chart, so each candlestick is 5 minutes. 21st of April, so yesterday, this is California time. So at 7:45 in the morning, there was a breakdown right there. A couple of times it came up and tested this overhead resistance. It failed, but the important thing is right there. I would have shorted it right there on at 8:40 in the morning. And let's say you have an opportunity to hold it for a long time, let's say for a few days. So you buy puts a few weeks out, let's say, okay, and you held it through. So you could just exit at the end of the day. That's already a huge gain like that. So that's the end of the market right there, and you could have already made nice money. But let's say you held on overnight into today, again did nothing, and you just held on through today. You see how big of a gain you would have gotten. This is if you're holding short-term options that are expiring just a few weeks out. A 4% gain for the underlying could be hundreds of percent gain if you're holding the put. So this is one way to trade it. So if you're interested, you can sign up for the indicators, and then you can use my indicators to do intraday trading, so if you so desire. But for us humans, it is better to trade on daily charts. In other words, each candlestick is 1 day's worth of activity. So here we're looking at NASDAQ, and NASDAQ, I wrote here back in March. NASDAQ entered bear market on 8th of March. It bounced significantly, but it did not close above this blue support resistance, which would mean bull market. It rallied strongly, but failed nevertheless. And this is already a short signal on 8th of April. I didn't send it, but once again, if you have my indicators, you can just use them, and it's pretty obvious. So this is already a very successful trade. What's important is we're, number one, broke down below this yellow line. This is really bad news. And number two, we're approaching the lows from 14th, 15th of March. So honestly, I don't think it's going to hold. Just the way this is selling is unfolding, I think we're going to break down below this low, make a new low. By extension, S&P will very much likely close below this yellow line. So again, this is game over. This means bear market at 4159 for S&P 500. For NASDAQ, it's already happened, so we're already technically in a bear market for NASDAQ. Here's Dow Jones, and Dow Jones kind of follows S&P more or less. So a bear market level for Dow Jones is at 32,948. So once again, if we get there, we close below it, I think we're going to collapse. We're going to continue lower. The important thing is that the nature of the market changed, and we're going to continue lower. Maybe make a bounce and then continue lower. Another bounce may continue lower. So this would imply we want to be looking for to sell the rallies, basically. We do not want to buy the dips. We want to sell the rallies. Once that happens, we haven't gotten there yet, but I think we're going to get there. So this is quite bad news if you're a long-term stock investor. And Russell 2000, the small caps index, this one actually is was even stronger under pressure, and it's entered into a bear market where I'm hovering here on January 18th. And since then, you can see there were several opportunities to sell it short. I did this not the actual alerts because I want to, number one, see the S&P 500 turn around into a bear market before I start shorting anything, and it hasn't yet happened. So I want to wait for S&P to confirm bear. But notice that we're actually super close to new lows, and generally speaking, during the bear market, we are making a series of lower lows and lower highs. During the bull market, we're making a series of higher highs and higher lows. So when you see a series of lower lows and low highs, you are in a bear market. So small caps Russell 2000 is the weakest of the bunch, followed closely by NASDAQ. Not a good sign once again. So we will monitor this closely. I think once again, if S&P 500 closes below this important level of 41.59, then I think it's game over for the entire market. Okay, so I wanted to show a divergence here. This is New York Stock Exchange advances minus decline volume. So advanced decline volume line. So you can read about the advanced decline, how it's calculated. It's basically the number of stocks that are going higher, and then from that number we subtract the number of stocks that are going lower, and then to that number we add today's number. So that yesterday we had a number, advances minus declines, and today we're going to add a new number to it. So that's called cumulative measure. So you can read about it. I'm not making this up. So advanced decline volume here at the upper part of this chart, and S&P 500 at the lower part of this chart. So you can see that S&P 500 made a higher low here, while the advanced decline line continues to make a series of lower lows and lower highs. Today, in fact, it made a new lower low. So this is a bearish divergence. Once again, this is not a good news for stocks, and coupled with the fact that we have S&P approaching bearish levels, I think we can make a strong argument that we are already in a bear market. Add to that fact that we have several important industry groups. Here is SMH, semiconductors. So this is very high volatility, a very high risk sector, or rather industry group. And this is a 52-week low, what I'm looking at right now here. When this happens, this means that the investors are just not really interested in buying risky assets, and they're selling them. They are more interested in either doing nothing or possibly buying something like utilities. So very briefly, utilities are doing much better than semiconductors. Semiconductors again at 52-week lows. The same goes for biotech. So XBI Biotech is at fresh 52-week lows. Also notice that biotech actually started this whole business of collapsing right there. This is November of last year. You see, this is a bear market for biotech in November of last year. This was the first canary in the coal mine of this what seems to be inevitable bear market. It's quite possible that we're already in a bear market, and we're going to start making lower lows and lower highs for the general S&P 500 index. But let's say you didn't hit my warning here, and this is exact date is right there, November 10th. So I actually most likely send this to my subscribers to avoid it. And let's say you didn't, you think, oh man, it can't go any lower. It went lower 37%, you see, and it's fresh lows. When we have fresh lows, we might see more fresh lows, you see. People are like dumping them, constantly dumping them. As a matter of fact, let's look at a stock that was recently dumped by my God, I forgot his name. He was like a famous investor, famous hedge fund manager. He closed them. Netflix hedge fund. Let's see who was. Oh yes, Ekman hedge fund. He shed stake in Netflix. So he just did it now, after I don't know when he bought it, but that's definitely not a great place to exit at new lows. So, I'm not obviously, what's his name, Bill Ackman, but I have my eyes, I have my indicators. So right there, this is it. On January 18th, this would have been my signal to get out, not on March, or rather April 20th. See, if Bill Ackman used my indicators, then he would have been 57% more correct. He would have still probably been wrong here, because most likely he bought it at some higher price before. But here he's just horribly wrong, you see. I would have been able to exit at 512. He got out at 215. You see the difference? There's quite a big difference. And you had several days here to get out. You had January 18th, 19th, and 20th, and then even a few, it gapped down afterwards, but my alert would have been sent right there. We were not trading it at MasterCharts Trading. But the fact of the matter is, you gotta know when to get out. You gotta know when to fold them. So this yellow line of my indicators provides a clear exit point. Once it gets there, just get out, and then you will thank me later, you see, because that's another 57% that you didn't lose. Moving along to junk debt. So junk debt or high yield bonds completely unraveled. Bear market started possibly even in November here, but there was a fake out here in December. So for sure, this is the latest bearish signal, January 5th, 2022. Again, if you let's say you're holding junk debt in your retirement portfolio, and you're like, oh, Alex is saying that I should get out here in late January. Let me get out. Okay, so I got out, and look how much you didn't lose. You see, you didn't lose, over 7%, and for junk debt, this is enormous. You see. So clearly we got out here at 18th of January. I wanted to show this to you on the weekly chart as well. So weekly meaning each candlestick is 1 week's worth of activity. You see how, there's this lows here from pandemic lows. We're kind of rapidly going that direction. I wanted to briefly again show you a couple of other bond funds. Here's municipal bonds. Look how, this is our exit point right there on January 10th. How much more it lost after this. So in other words, you didn't lose that much if you heed my advice. Here's LQD, which is corporate bonds. Same thing. Again, you could have gotten out right there, 10th of January. We're approaching lows from the pandemic. This is big. Now with junk debt, so why do I keep bringing junk debt up? So correlations. This is correlation coefficient to S&P 500. How much does the S&P 500 move in the same direction as junk debt? By and large, it does the same thing, or very similar. You see, it's positively correlated. Occasionally, we got a negative correlation. So this is why I worry so much about the junk debt, is that we're making lower lows and lower highs, and junk debt is actually a leading indicator of S&P 500 or stocks in general. So we just made a new low. Really bad news. So I think with a pretty good certainty, I would say we're like 80%, I would say we're already in a bear market, meaning that we should we should short the rallies. We should not be buying the dips. So maybe 20%, there is a chance we're still gonna claw out, claw back out into a bull market. But by and large, I think stocks are in a bear market already. Let's move on to the Forex universe. So here we're looking at British pound, GBP versus USD. So I kept thinking that dollar, I'm going to look at DXY first, dollar index. You see, I keep writing topping? Maybe? No, it made a new high. So dollar has broken out into a bull market. You see how I'm not thinking? I'm just looking at the chart. This is right there. It's written right on the chart, July 13th. How do I know? It broke above this blue line, and that's it. That's all I need to know. I know nothing about nothing. I just know the lines. Okay, and I was very correct with this prediction. Okay, so with British pound, it's part of the general dollar index, of course. British pound broke down right there, 4th of November. You had opportunities to sell it short, sell it short, sell it short. So, if you're a Forex trader, this is 700 pips. All you gotta do is just, follow the lines, you see. So, new lows for British pound. New lows, or this is USDCHF, so US dollar is winning this battle, basically. So same thing, we buy in this case, and a very nice move from the last opportunity to buy USDCHF. This is 330 pips. So, this is very, very nice move. Congratulations again if you were able to open. Now, why do I give a crap about the dollar? Is that because we trade gold constantly? So gold, despite very strong dollar, was able to move higher. Again, several opportunities to buy gold. We were long gold. We were long gold miners. Latest selling, it definitely was strong here for this week, but I think it might be an opportunity, if anything, because we're actually very close to this really great level to buy gold at 1923. I think it's a very nice level. 2 times already we bounced there. So let's see. I think we're gonna level out here and then continue higher. I think we're obviously gonna at least try to retest this high. There's a good possibility of this from the March of 8th low high. So that's gold, and we do trade gold miners. If you're a subscriber, you can see how many gold miners we're gonna cover this week. So stay tuned for that. And finally, coming to a close, we're looking at Bitcoin now. Now, I have been bearish on Bitcoin since right there, January 5th. Before that, I was bullish on Bitcoin, and we were buying it, you see. But then something happened, and we started looking, oh, this is not good. This is a breakdown right there on 5th of January. We were starting to short it. We were shorting it. You can see that all of these opportunities actually worked out quite well in our favor. We are currently touching and retesting this most critical support level. It is currently at 38974. I'm reading it right off the chart. It's marked by this yellow line of my indicators. I think if we break below that, we will collapse. Especially these lows from January will be taken out, and I think we'll continue to like maybe 10,000 easily. So yeah, I don't know. People are buying Bitcoin, and I'm like, no, don't buy it. Short it. Or short it on bounce. So this was an actual opportunity, an actual alert right there, April 4th. All right. Don't forget to hit the like button, please. So this is important, seriously, because if we have more likes, then we will bounce higher in the ratings. So please do that. Once you hit the like button, subscribe to this channel, and then head over to MasterChartsTrading.com, click on sign up, and sign up for the trading indicators that are these lines on the chart, the green, blue, red, and yellow line. They are available for TradingView.com. You only need a free TradingView account, but you need to sign up on my site in order for me to open the door for you on TradingView. If you want the newsletters, so newsletters we're going to cover separately all of the stocks that I'm covering over here, and I send daily alerts, and I send weekly members-only videos. And if you want both of those trading indicators and newsletters, and sign up for both, I think it's a great deal at $60, also on sale currently. Also, I have now a new thing. If you want to chat with me on a monthly basis, 60-minute one-on-one screen share session, including everything I have, the trading indicators and newsletters are only $259.95 per month, so sign up for that. Again, please don't forget to hit the like button. Thanks for watching, and have another great trading week. Bye-bye.